The Lal Street starts the truncated week on a healthy note. The Nifty and the Sensex saw nearly 1% each, led higher by PSU banks and defense stocks. The Nifty ends above 24,500. Broader markets rise in line with the blue chips.
In significant relief for oil marketers, the government has agreed to allocate 30,000 crore rupees payable over FY26 and 27 to partly compensate them for their over rupees 40,000 crore in under-recoveries. The stocks spoke up on the news.
AC stocks in focus. Voltas's first quarter numbers miss estimates on all fronts as room AC demand remains weak. The stock is lower by 6%. PG Electroplast down another 15% today after the management significantly cut guidance last week. Speaking to CNBC-TV18, the management attributed the revision to a lack of recovery in AC sales in July and August.
Well, hello and welcome to Market Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Amakshi Doria, and with me is my colleague Subhi Upadhyay.
I'm Amakshi. Well, a good Monday after all. Long time waiting for the bulls. So it was a good start, and we will, of course, talk about that over the next 20 minutes. We have you completely covered all the big news flow, the key developments on the street, the corporate voices, and, of course, the events to track ahead. Let's kick it off then by looking at what was a very healthy start to the week for the market. Finally seeing a 1% recovery, about 200 points in the Nifty. And why we call it healthy is because it was a very simple uptrending sort of a day. It didn't have too much of volatility, too much of sharp, jagged edges. And it was fairly well-rounded as well. Mid-caps did well. And the large-cap screen was also up and about. So overall good participation, Mamakshi.
Well, absolutely. Finally the grain that the bulls had been looking out for, Surbi, and a lot of this was actually contributed by the Nifty PSU banks. They were up almost 2.2%. Look at the moves on, Indian Bank. It was up almost 3.5%. And a lot of stocks actually reacting to their numbers on the positive side. From the broader markets, we did see some reactions come in on names like HBL Engineering. Even Siemens saw good recovery after initially dipping in trade, and lots of stocks that were reacting to numbers.
Oh, absolutely. So overall, a healthy session finally, a relief for the bulls. Let's tell you what all we have lined up over the next 20 odd minutes. We'll start off with, of course, as always, the key movers and shakers of the day. Vivek will round up the action for us. Today, we also, of course, decode some very, very strong inflow numbers that have come in from mutual funds for the month of July. And we'll tell you which are the fund categories that are really ticking. After that, we focus on AC stocks. They've been feeling the heat with the entire sector down and out. And stocks like PG Electroplast cracking once again today. Then we put the spotlight on Tata Motors. Market is looking at the prospects of maybe a turnaround, maybe the worst being in the price, because there was recovery on the stock after a weak Q1 performance. Finally, the key events to watch tomorrow. But let's, as always, kick it off with the movers and shakers of the day. We have Vivek joining in with all the action. Vivek.
Well, thank you so much for that. After a while, like you mentioned, a session where you actually saw an uptrending session, a clean move upside is what we saw throughout the trading session. Well, to start off with, after the fact that SBI gave a steady set of numbers and maintained the guidance, especially the credit growth guidance, something that the street was looking forward to, that actually aided the entire up move as far as the PSU banking pack was concerned. That particular sector was amongst the top gainers today. All of the PSU banks, in fact, did quite well in the session today. Another stock, one from the broader end of the market, D Development Engineers. That particular stock gave out its numbers midday today. And after that, we also had the management strong guidance for FY26. That stock ended higher by over 13.5%. Dobbs Industries, numbers came out over the weekend. Steady Q1, but the management went and maintained the guidance as far as FY26 is concerned. Almost 10 to 10.5% PAT growth is what they're anticipating. Stock higher by 11.5%. HBL Engineering, something that you alluded to earlier as well. This particular stock from the broader end of the markets, very good set, ended as the top NSE 500 gainer for the day. And Sai Life Sciences, again, this particular stock, very, very strong Q1. And after that, whole host of brokerages went and upgraded. Jefferies being among them. That stock higher by over 6.5%. On the other hand, quite a few laggards, some of the usual suspects. PG Electroplast, a 25% downtick on Friday. Today, again, we did have the management, but they did allude to the fact that number one, inventory remains quite high and they see a recovery only post-November. That stock ended low by over 14%. Voltas, this particular stock came out with its numbers post-market as Fridays. post which, it was a weak set, it was a miss throughout, and the bigger worry as far as analysts are concerned is the kind of market share loss that particular company is seeing. Equitas Small Finance Bank, in the broader end of the markets, this was a significant laggard. Asset quality is something that was quite weak. NII as well as pre-provisioning operating profit both fell on a year-on-year basis. And lastly, Amber Enterprises, again, the EMS space, the consumer durable space, the entire value chain saw a very weak trading session. And today you saw an Investec downgrade dragging Amber Enterprises lower. Remember, almost 6% lower for this name today.
Well, so those were some of the top movers and shakers for the day. Thank you so much for that, Vivek. Now, in a big relief for oil marketers, the government has agreed to allocate 30,000 crore rupees payable over FY26 and FY27 to partly compensate them for their over 40,000 crore rupees in under recoveries. The stocks were up in the trading session today. We now have Sonal Botra taking us through the highlights for that. Sonal.
Well, thank you for that. It is a big news that has come by, and the street was waiting for this for a long time. That is the 30,000 crore rupee compensation that these companies have received in form of LPG subsidies. Now, do remember they have under recoveries to the tune of 41,300 crore rupees till June 2025. So only a part of it is what they have received. What we don't know whether this is a one-time compensation or whether there will be more tranches of this compensation that will be given to these companies as well. Nevertheless, brokerages, they are quite positive on this one. Jefferies says they estimate an upside of 29 to 42% on EBITDA for FY26. In terms of profits, it will be around 38 to 70%. But this is only when they get the entire compensation in FY26. They will be paid in tranches. We don't know whether all these tranches will take place in FY26 itself. ICICI Securities says that LPG compensation is a material boost to their earnings. It takes away the margin worries for FY26 as well. Morgan Stanley, they prefer HPCL and BPCL. They say subsidy could boost FY25 earnings by 75%. Deleverage their balance sheets by 12% and support a consistent return on capital employed to the tune of 14 to 15%. There could be a downside if fuel prices are cut by 1 to 2 rupees per litre on the marketing side, but that's a limited downside that they talk about. UBS says that the payment that they are receiving right now is equal to 75% of FY25 dues and 62% of the dues which are accumulated till June 2025. So that's around 62%. It is equivalent to 8 to 16% of their book values for all these three stocks for FY25 and is equivalent to 6 to 9% of current market capitalization as well. So yes, it's a relief, but a lot depends on what's happening with crude sourcing as well. Maybe that's the reason the stock are not reacting as positively as it was expected. But nevertheless, it is a positive news that has come by for the entire sector.
Okay, all right. Sonal, and long awaited. So some relief coming through. Thank you very much for that. Let's put the spotlight on some great news that we got in terms of the monthly mutual fund data. The inflows for equity mutual funds have hit a record high, the highest ever level. The net equity inflow in this month of July has been 42,672 crores. That's a huge number, and it has overtaken the previous high, which was last year in Diwali, around October, which was around 41,000 crores. So where does all this money come in from? New fund offerings. Over 30 NFOs, and all put together, they have pulled in over 30,400 crores. That's the might of these NFOs. So you'd wonder, what are these new funds? Well, they're across categories. There are lots of thematic funds that have pulled in the money. In fact, 9,000 crores has come in from thematic funds, the likes of HDFC Innovation Fund, ICICI Prudential Active Momentum Fund, and many others. Then there have been new launches in the mid-cap category, in the multi-cap category. For instance, Bajaj Finserv launched their small-cap fund. Franklin India launched their multi-asset fund. And there have been, others like the multi-asset allocation, category, where Franklin launched a fund. So all of it put together has pulled in huge amounts of money. That's point number one. If you look at the next sort of interesting trend, it's investors' love for mid and small caps. And that really illustrates the point. Look at that. Small cap funds drawing in the highest ever inflows of nearly 6,500 crores. That, is huge in comparison to the 2,100 odd crores that large cap funds have garnered. So clearly the market's preference is towards SMIDs, at least this is pulling in more and more money almost on a consistent basis. And this time around, if you look at the multi-asset category, then it's garnered almost 6,200 crores, which is a record high for the multi-asset category as well. All put together, a fantastic month, a month of records when it comes to equity inflows coming into mutual funds.
Well, absolutely, Surbhi, and this comes in at a time where, the markets were quite volatile. There was a lot of uncertainty. So given the kind of confidence that our own investors have shown this time around, I think it's good tides for the AMC industry. But, I think it's a good time to bring in our market experts, Anand Tandon, who is the market expert, and as well as Thakkar of ICICI Securities. Good afternoon to you, gentlemen. This is Vamakshi joining in. And, I'd first like to get your take on the markets, Jay. Today, after several days, we've seen an uptick. Where do you think the markets are headed from here on? And we've, of course, crossed above the 24,500 crucial mark.
Actually, and Surbi. Well, definitely, today's recovery is quite meaningful, I would say, because it has not only closed about 24,500, but then, I would say that there has been a very clear shift in the options data as well. I mean, it was quite oversold right at the start of this week. I mean, the PCR was at 0.48. And generally, this kind of PCR you see on Wednesday or Thursday, and you can expect that Nifty to trade with a negative bias. But then on a Friday or a Monday, and that is on a day 1 or 2, or start of the day 2 of the weekly expiry, when you see this kind of data, which clearly indicates quite an oversold reading, and generally you see a bounce back. And that is what has happened in today's session. And it has now moved to one which is quite a neutral level. By that, I would say that there has been a good amount of put additions at the lower end. Interestingly, Nifty Bank has also managed to close above the levels of 55,200 now. So 55,200 to 55,000 will act as a very crucial support there. I mean, this is also one of the sector which was trading with quite a negative bias, but then post the result of SBI, we have seen a good bounce back coming in the PSU banks, and that has helped Nifty Bank to close above 55,200. So now Nifty 24,500 and on Bank Nifty 55,000. These are the two levels. I think till Nifty manages to hold on to these levels, I think the short covering is still expected, because if we also see the net FI long position has been around 8 to 9%, which has been the lowest since March of this calendar year, and it's been consecutive. It's been trading below the 10% mark for more than 6 to 7 trading sessions, and that's after 2012. So, Vamakshi, generally, when we see this kind of data, short covering cannot be ruled out. And we have already seen 6-week or negative weekly close, which is also one of the rare events, although Nifty has just fallen by 5.25% as compared to the previous falls of around 7 to 8%. But then since we have closed for 6 negative weekly close, so I think one positive weekly close can't be ruled out. So the data is quite oversold. And if the current support levels are held, I think a bounce back until 24,800 to 25,000 on Nifty, and 56,000 to 56,300 on Bank Nifty can't be ruled out.
Well, absolutely, Jay. But moving on, let's also take a look at AC stocks because they've taken it on the chin today. PG Electroplast, Voltas and Amber have seen cuts of 5 to 15%. What's ailing all of these stocks? We have Riya Bhatia joining us with more details. Riya?
Well, yes, today all of these AC and cooler stocks were beaten down in trade today. So let's take a look at what was hurting these stocks. 3 key reasons. First up, Voltas reported a very weak set of numbers. Even PG Electroplast also reported a very weak set of numbers, and they also cut their guidance for FY26 in a very major way. And there are also high inventory concerns for all of these companies. First, looking at Voltas, for Q1 FY26, all of these numbers were below estimates across the board. Revenue was down around 20% on a year-on-year basis. Even EBITDA and net profit were each down by 58% compared to the previous year. And EBITDA margins nearly halved to 4.5% versus 8.6% in Q1 of FY25. Now, Nomura on the back of this has a neutral rating on Voltas. They've lowered their FY26 RAC industry growth targets to 5% versus 10% earlier. They've also cut their FY26 and 27 UCP revenue growth targets to 6% and 24% versus their earlier targets of 13% and 21%. Even Even CLSA has a hold call on the company, and they've said that the high inventory is likely to keep utilizations low and will also continue to weigh on margins going ahead. Jefferies, on the other hand, still continues to maintain its buy rating on Voltas. They've said that from here on, the early festive season possibility of a second summer, as well as the new BEE rating and tactical cost control, could help RSE recovery going ahead. Moving on to PG Electroplast, they've cut their FY26 guidance. The revised revenue growth guidance is at 17 to 19% versus the earlier guidance of 30% of over 30%. They've also revised their net profit guidance to 3 to 7% versus the earlier guidance of over 39%. So big cut coming in on the net profit front as well. And the company has also said that this time around the lack of rebound in AC sales in July and August was the reason for the revision in guidance. But they've also highlighted that they are expecting a normalized level of inventory by October and November, and that one season doesn't alter the course of the business trajectory for the full year. Just looking at the valuations as well, PG Electro and Voltas are both trading below their 3-year average PEs, and Blue Star and Amber are trading above their respective 3-year average PEs at the moment.
Okay, all right, Ria, got that. Thanks very much. Well, let's move on and put the spotlight on Tata Motors. The stock gained nearly 3% today after the firm came out with the first quarter numbers. The numbers, some could argue, were maybe slightly shy of estimates. The estimates were anyway very, very muted. But the management has held on to its FY26 guidance for JLR. Rima is here to tell us more details on why the street perhaps took it as a positive instead of a negative. Rima.
Thank you. Let's first go through the numbers. Now, Q1 consolidated revenue was down 3%. EBITDA was down 35%, with margins coming in at 9.3%. And that led to a drop of 35% in the profitability. But large part of the impact of the weakness in Q1 was linked to the tariffs. If you strip that out, analysts say numbers were largely in line. The management commentary on JLR then: healthy demand in the US, stable in UK, but EU and China is still subdued. They also quantified the tariff impact: 500 to 600 million pounds this year, and thereafter that 300 to 400 million pound. What the analysts point out is that despite a weak Q1, the company still holds on to its JLR EBIT margin guidance for FY26 at 5 to 7%. So that is reason number one, for the up move today. Secondly, as you pointed out, the stock has already corrected. It's down 12.5% year to date. From its 52-week high, the stock has fallen 43%. So perhaps a lot of the bad news could be in the price. And thirdly, valuations. Now, Nomura says valuations are currently at 4.6 times forward multiple in terms of EV to EBITDA, which they say is undemanding but fairly, fair considering all the risks. And lastly, the street is looking ahead to what the festive season holds and whether we are going to see an improvement in the domestic sales. Back to you.
Well, thank you so much for that, Rima. But Anand, if you can come in on Tata Motors, year to date, the stock has not done too well, down almost 13%. What's your take on this counter?
Well, as I said a while back, I think the problem is that you're looking at a situation which is very fluid in terms of tariffs around the world. If they have held on to the guidance, you have to understand that, you have made a guidance, let's say a quarter back where there was no tariff and now there is. The fact that you haven't made a change is a little surprising at the very least. The only thing you can assume is that since they are manufacturing overseas, the impact is a little lower. Overall, I think the issue is that the global markets are going to remain in a bit of a tizzy because of the various tariffs that are being put up. And there is no doubt in my mind, at least, that there will be a slowdown in terms of the overall global economic growth. In that kind of context, companies which are exposed to the international markets are not likely to be able to perform very well, which is something that you can see in the numbers. Whether or not the current valuation is justified is a different call. I think they're still going through a business restructuring, which may actually provide some support. But overall, I would think that at this stage, you are better off looking at companies which are a little more domestically driven.
Okay, so that's Tata Motors. Anand, thanks very much for your perspective on the show today. Really appreciate you joining in. Thanks to both our guests, in fact, on that note. We'll take a quick break, come back on the other side. We'll get you all the top corporate voices along with the key events to watch tomorrow. Welcome back. Let's run through all the key corporate voices that we picked up during the course of the day. Let's start with State Bank of India. The shares were up about 2% after the bank's management has said that the bank would maintain a credit growth guidance of 12% for the full year. It also adds that if things were to improve, then it could even reach 13% growth this year. The firm's deposit guidance is at 10% for the full year. SBI expects a U-shaped recovery in net interest margins with a slight dip in Q1 and Q2 and then a recovery to almost 3% by the time the year ends. The firm also adds that there was no great concern in terms of asset quality.
While Cummins India fell 0.5% despite beating estimates across the board, the firm's top boss said that growth was broad-based in the domestic market from an exports perspective and hence presents a good growth opportunity. The firm is cautious about exports and is still not seeing a steady trend. The company plans to maintain their margins or even better them.
Up next, JK Tyre is targeting double-digit growth in the current financial year after the domestic industry saw 11% growth. The firm adds that the sentiment remains good in the domestic market. However, with a top line of just 3% in its US market, it is looking to divert to non-American countries. The company expects its Mexican operations will become profitable in the second quarter.
Well, and before we wrap, we bring you some key market events to watch out for. Gaurav is standing by with the key events to focus for tomorrow. Gaurav?
Well, yes. From key events, if we look at the global market, first let's talk about US CPI. Now, this is something that we will be watching out for because remember, US has kept their interest rates unchanged. So, this is some interesting data that we will be watching out for. Other than that, US and China, now the trade tariff truce comes to an end tomorrow. Let's see if it is going to get another extension because remember in April they got an extension of 90 days where tariffs were going to be as high as 145% from the USA on China. Currently China is paying just 20% tariff on USA. Other than that, from Indian market we have a couple of stocks which will be in focus on the back of the earnings. So first let's talk about HAL, ONGC, Hindalco Industries, Apollo Hospitals. These key stocks are definitely going to be on our radar tomorrow. But other than that, there are some companies like Cochin Shipyard and BDL, Nivesh companies like Honasa, Nazara Tech, Nykaa, and also some heavy capex companies like Suzlon and V8 Wabag. These companies will also come up with their earnings tomorrow. Remember, Nazara Tech will also be considering bonus issue as well as stock split. So definitely watching out of this stock specifically. And lastly, let's also not forget that tomorrow we will also get India CPI data. We have also kept our interest rates unchanged. So CPI data is something that we will be closely watching out on because this can actually determine the trajectory of rates going ahead.
Okay, all right, Gaurav, absolutely. CPI data always important and we will definitely look out for that. But that's tomorrow. Right now, I think it's time for a goodbye, Vamakshi.
Absolutely, Surbhi. And it's a wrap on this edition of Market Forward. But don't go anywhere. We'll be back with more news and updates on the other side.